All right.
Hello, everybody. We are live once again. Money Mobsters, episode 5 with Dougie. Dougie, what's up, man? How's it going?
Enjoying some games this week. Having a good week so far. Man, it's just been one hit after another all week. We were just talking offline saying we had a whole week happen today, let alone the previous week.
Yeah, right? big news day. So we've got a full pack show here. In the description, we've got Doug's X, we've got my X, and then we've also got a channel called the Street Exchange set up by a friend of ours. And if you guys are wanting a 24/7 chat room, because I know it sucks when the live streams end and the chat goes away, check out the link in the description below called the Street Exchange. That also has streaming schedules on it for when everybody in the community is streaming. So you can also, of course, find other people who are chatting. That if no one's streaming, you can find people there. So, yeah, Dougie, tell me about this chart that's behind you here. We were talking about this TA chart last week for Bitcoin.
Oh man, I accidentally did it like perfectly on the trend lines here. I haven't looked at it. I've just been busy with everything else going on in life. Didn't even look at it till right before we went on and said, "Oh, how's that going?" And brother, it is playing out like exactly on the formation here. Let me pull up the
beautiful.
I will share the screen here. So we busted above the EMA 20 close, fought with that for a little bit late last week, and finally got above this trend line that we peaked in early October, and we pumped it a few times, and now we've broken above. Got up here, got rejected at just under 95, and we're back testing that particular trend line right now. Look at this.
It's holding up, though. It's holding up.
Right on it. Yep. Which means we can start following up and then probably resume this bottom golden line here.
Well, especially with the big rate cut announcement today, which, was sort of the precipice for that drawdown in October and November, was a lot of people coming out and saying that, maybe we don't need a rate cut, to which, certain Fed governors said that's utterly ridiculous. So, of course, we did get our rate cut today.
Right.
Expected to get two more next year in 2026. But for now, it seems like this is the one, the last one that we're getting for sure. And obviously, any increased liquidity is going to help Bitcoin.
We need to rewind a second, okay? Because we peaked in early October. NVDA, cryptos, all this stuff was peaking in early October. It looked like we were just going to crush right through to the end of the year. People were, Stephen Farrell was talking about 7,000 S&P by the end of the year and everything, right? And then all of a sudden, a couple of Fed governors came out and said, well, we might not cut.
Right.
Those jerk-offs all voted for the cuts. All the ones that were on the record saying we might not cut all voted for the cuts. I don't understand. What the hell were they doing? Were they intentionally tanking stuff?
Who knows? I have a tinfoil hat around my apartment somewhere here. So, yeah, it's certainly interesting how it played out. Another interesting play out today was, just on top of the rate cuts was, Oracle. Some interesting comments out of Oracle today after the bell around their future revenue and their debt structure and who's paying for what and how they're paying for it. I didn't get a chance to fully look at it, but I saw a few of the quotes come out from the earnings call. Stock tanked. It's down 12% after hours. Did you get a chance to look at it at all, Dougie?
I was listening with one ear to the earnings call, which was boring as all of my mind. Oh my God. I haven't had a chance to actually sit down and look at their deck. But they were, oh my God, they got, I don't even know if they knew what they were saying. I mean, one of the guys was like saying, okay, I'm just going to reiterate this point. And he said it like 3 or 4 times. And it was like, okay, you can stop saying that because no one believed you the first 2 times.
Well, here was one of the quotes. I'll just read it here so you guys get an idea of what we're talking about. So here's a quote from the CEO. We don't actually incur any expenses for these large data centers until they're actually operational. There are a variety of sources available to us throughout our debt structure and public bond bank and private debt markets. Customers may bring their own chips to be installed in our data centers and suppliers who may lease their chips rather than sell them. Both of these options enable Oracle to synchronize our payments with our receipts and borrow substantially less than most people are modeling. We expect and are committed to maintaining our investment grade debt rating.
Okay. So what he's saying there, and I remember hearing that statement. So what he's basically saying there is, hey, we're actually leasing these data centers, so we don't have any upfront capex on any of the real estate or the build out or anything. We're just leasing it all from a third party landowner, and then everybody can just co-locate if they want to, or we can host cloud stuff. But it's not really our real estate. We're just leasing it. We're acting as a middleman, essentially. And so, well, that's why they're not going to have all the debt that's behind the structures and everything. I mean, it's kind of like why you might choose to rent a house rather than own it. But at the same time, if you don't own it, you can get kicked out. So, you have substantially more risk there as well.
And I remember a few weeks ago, when this whole AI trade and Michael Burry and all this stuff started popping up, and it became quite clear that, the commitments that Sam was making, when he had that defensive moment with Brad Gerstner, in the heat of that, I think it was pretty clear and obvious, at least to me, that if anyone was going to get hit really hard by this, that backlog that Oracle jumped up 3 months ago, I think people are starting to question how legitimate that backlog is, especially when you just go from, what was it, 100 billion up to 300 billion or whatever eye-popping number it was. I mean,
right.
That's not usually how backlogs work.
Right. And then we said, well, who's paying that to you? And, it's just OpenAI, and they don't make any money. So how are they paying you $300 billion?
Yeah. Not only do they not make much money yet, but they also apparently, are gonna be rolling out ads a little bit slower than anticipated, because there was news circulating that they were going to be moving towards ads, and they've come out and denied that story, that they're actually not going to be doing that. Gemini said the same thing, by the way.
Well, they had the code red.
Right? They had the code red. Yeah, they're focusing back in on product rather than monetization. And some reports came out that Gemini was going to be integrating ads, and they came out and refuted it as well. So the LLMs and the answer machines are going to continue to be free.
Yeah. Gemini got a giant shot in the arm this morning that I heard. That Hegseth announced that Gemini is going to be, I guess, the provider of choice for AI to the Defense Department. So,
I missed that one.
Congrats!
Nice.
If you can find that on.
Is that why the alphabet was up this morning?
I was driving into work when I heard it.
See, Pentagon taps Google Gemini, launches new site to boost AI use. All right. U.S. Department of Defense deploys Gemini AI for combat capability. From Axios. Wonderful.
Yeah. let me share my screen. We haven't tried sharing with audio yet, so I'm going to try to share this.
It should work. I've got it turned on,
but I might not have it set up right. Let's see.
Here.
Are you getting audio?
Spelled AI. As technologies advance, so do our adversaries. But here at the War Department, we are not sitting idly by. Under the leadership of President Trump, America will lead the charge on this technological transformation by revolutionizing the way we win. And that's why today we are unleashing GenAI.mil. This platform puts the world's most powerful frontier AI models, starting with Google Gemini, directly into the hands of every American warrior. At the click of a button, AI models on GenAI can be utilized to conduct deep research, format documents, and even analyze video or imagery at unprecedented speed. Building on the great work of Undersecretary Emil Michael and his team, we will continue to aggressively field the world's best technology to make our fighting force more lethal than ever before. And all of it is American-made. The possibilities with AI are endless. Now, let's get to work.
Pretty standard. Nothing surprising there.
So, I guess since we're not part of the military or Department of War, we're not allowed to go to the site. But this is what is at that URL now.
Interesting.
Yeah, but interesting. So anyway, huge shot in the arm. Whole bunch of new users coming to Gemini, and that just makes me think, man, what was that meeting like with POTUS after kind of the woke Gemini stuff that the president kind of got on board with handing over the answer machine for the entire military to Gemini.
Yeah, I think they've cleaned a lot of that up. I'm not sure if you saw the most recent All-In where they went over the OpenAI versus Gemini, and how they kind of flipped the script on that. But Friedberg pointed out
much of it is in the DNA where it's just built in and no one knows it, and they're unconscious of it because it's just so legacy.
Well, yeah. Anytime that if you have the majority of your workforce in Northern California, it's a liberal part of the country, so there's going to be some amount of that seeping in. But they really have gotten the focus back on product and pushing product and making it good, rather than making it a workplace for people to advance their personal objectives and worldview and applying that. I think we're pretty far away from, the Black George Washington or whatever was going on a few years ago, especially now that you've got Sergey back in the building and you have more of I don't know, they've sort of gotten back to the roots of pushing good product again, with very good focus. And I think they quite frankly got rid of a lot of those people. They have a voluntary layoff program, a voluntary exit program, whatever you want to call it. They had one of those a few months back. And I think a lot of those people who are unfocused or, not mission focused, a lot of those people are, out of the organization, or they're just not quite as influential anymore. So, with the AI dinners and the donations to the inauguration and all the things that have happened over the last 11 months since Trump took office, I think have made a large difference in terms of the products that Google is putting out versus what it was when you had a president who was literally telling social media companies to censor people.
Yep, absolutely.
With keeping with the Alphabet news, Waymo, 450,000 rides a week. Not bad.
Not bad at all.
I was told it can't scale, Dougie. I was told. That's what I was told.
Well, you were told it couldn't scale.
But here it is scaling.
Several years ago. And it still doesn't have millions of vehicles yet. So, we'll see. I responded rather spicily to I thought a tad spicily, just like I just sprinkled some.
You went fishing.
A little bit.
You went fishing for some Austin fumes.
I went fishing and I tagged Austin in the post, and I caught the whale. So yeah, that was fun. I was like, oh man, I hope he didn't take it personally.
Never.
Because I knew what we were doing. I knew what I was doing. I still think my point is salient though. Everybody online is trying to have a hot take, and so they're trying to call the race over, and it hasn't even started yet. I mean,
it's definitely started. It's early, but it's definitely started.
The starting gun has gone off, but none of the sprinters are standing upright yet. They're still, nobody's standing up yet.
I mean,
Waymo's got to figure out how to make millions and millions of vehicles.
They don't have to figure that out. That's not their core competency. They just have to buy vehicles. What they have to figure out is how to find
somebody who can make millions and millions of vehicles.
Yeah, and they have. They're partnered with Hyundai, and they're partnered with Zeekr. So the vehicles are on the way. Don't even worry about that. That's going to happen. Now, what I think would really change the game is if they can get personal auto, so like your own personal vehicle rather than robotaxi. But it looks like they're gonna do the robotaxi thing first, which makes sense to me.
Well, that's where their core competency is.
Yeah. Did you see Musk said that they're going to be removing the safety driver in the next 3 weeks? That was his newest promise. It's another timeline, Dougie.
I didn't see that. I can tell you that what they did do, and they stealth did it, is they basically removed the nanny from FSD. You can now ride in FSD holding your phone.
So there's no limitations at all? Like you can fall asleep in the car?
No, you can't fall asleep. So you can look at your phone and maybe read a text or do something depending on, and it's traffic dependent too. So if it's just you on a road, a highway with not a lot of cars around you, you probably could halfway read a book. But kind of just in regular highway traffic, you probably have every 15 or 20 seconds, it'll beep at you to put your eyes on the road, but that doesn't mean put the phone down. That means just look up and put your eyes on the road. So they've taken
Now, could you still get pulled over for that?
I had no clue.
You know what I mean? Like, officer looks over and just sees you, like, glued to your phone. The Tesla's not enforcing it. Like, could the cop?
I have no idea. I mean, I'm sure somebody will find out and make an X post about it. But they did, like, there was no hoopla or fanfare with this either. It was just kind of like, oh yeah, it's just the next thing. Yeah. Because it used to be like if you touched your phone, it would start trying to strike you out. Like you couldn't even like pick it up to look at it while the car was running. Now you can pick it up and you can have it in your hand if it sees that you're if you're watching what's going on, because it's doing eye tracking. So if you're paying attention to your surroundings, it doesn't care that you have a phone in your hand. And you can look down and you can do some things, and then it might beep beep, and then that's just a reminder to look back up and get your SA back. But it is a giant leap forward from a usability perspective. Where before it might have been hard to sell somebody. It's like, hey, come ride, check out FSD with me. And then, we're on a road trip and it's like, oh, if you touch your phone, it's trying to strike you out and disable itself. And now it's like you can have your phone in your hand.
Sure. Yeah, that's obviously going to be a game changer, assuming that, you don't end up with a news story where like someone is glued to their phone, has FSD on and ends up crashing. Like it does actually have to work. Yep. So
Well,
I'm going to give him the I'm going to give it the benefit of the doubt that it is working and that it's safe. But the part that obviously gives me concern is that they don't really release any of their safety crash data. And, there's been some lawsuits where people have, this was before the prior version. This was years ago. But people have abused the self-driving before it was ready. They ended up in a crash. And then Tesla tries to do what they can to obfuscate the data to, because there's pending legal action. So it gets a little bit tricky. So hopefully, that goes smoothly for Tesla. And I think anyone trying to claim a winner is getting ahead of themselves by quite a lot. You're right that it's really early. I think obviously Waymo's in first place right now. Anyone trying to argue otherwise, it's kind of silly.
Well, like I said, we're still in the first. If it's and it's not a sprint, it's a marathon anyway.
Of course.
But even if it were a sprint, we're still in. If it was the 100, we're still in the first 10 meters.
Now, I also think there can be multiple winners though. So you could have robo-taxi winners, you could have OEM winners, you could have, all sorts of different business models. Waymo could rent out the driver to Ford or Toyota or whoever it is.
Yeah.
Tesla
was going to do that for a long time.
Yeah, but they've decided to go the vertically integrated route and just own the whole stack.
Well, I think we were under the impression that, and this we heard this on multiple earnings calls, that Tesla was in discussions with OEMs to license their FSD software. Now they probably had a little bit of setback with his political journeys, which he also said he regretted doing. This, or I heard it this morning. I think he said it on a podcast that was published earlier.
But I think, there's no reason that this can't be multiple winners. The market is so huge, and I think everyone recognizes that, especially Tesla bulls, which is kind of what confuses me about their perspective is we're still at 0 employee-less robo-taxi rides. Like every single robo-taxi ride done with Tesla has had an employee in the car to this point. So I don't know how you can claim first place. It'd be kind of like playing basketball and missing every single shot and then saying that, you're the NBA champions. And that it's obvious in hindsight. That's the thing that gets me is like, oh, this will be obvious in hindsight that, they're going to eat Waymo's lunch. It's like, you're not even on the same league right now. Yes, you have vehicle production, but in terms of like actual miles driven L4, not even close right now. So we can tone back the rhetoric a little bit and just be real of the fact that there are advantages that Tesla has that Waymo doesn't, but trying to claim that, this is going to be decimation.
Like we said, they had a lot bigger lead 18 months ago, and I feel like they've squandered it.
So Tesla?
Yeah, and they let Waymo do a lot of catching up.
Well, I don't think that Tesla was ever actually ahead. So, that my stance
they had the fully functional neural net. They're ahead.
If they had the fully functional neural net 18 months ago, but that was my argument 18 months ago, is that they didn't actually have it and that it was still in development. It was in development in 2019 and Elon oversold it. It was in development in 21 and Elon oversold it. And it was in development in 23 and Elon oversold it. Now it's finally getting there because now they're finally taking the, the nanny. They're scaling it back and, making it more user friendly. But, Waymo has the driver. They've got it solved. Other than, weird edge cases.
As long as you have a full, complete digital twin.
Yes. Yeah. So it's a bigger, longer process to set it up.
It's a huge caveat. It's a huge caveat. So look, you could take what FSD does and teach it to do you could teach it to fly planes. You could teach it to fly rockets. You could teach it to drive robots. Like, these are all the same thing at its core from a functional perspective, right? You have so many inputs and you have so many options for outputs, and you just train it on how to do that with visual or, with other sensors as well. I think certainly when you get into space flight, you're going to need radar.
But exciting developments. I really do hope that this time
the tech is amazing, and it's just they're solving it from two different perspectives, and that's, I think, a net good for everyone, is that we've got two competing solutions to the same problem, and they're going to be useful in different ways going into the future. Like, one is going to show us one is going to give us a really hyper accurate digital twin of certainly all of our major cities. If you think about what Google Maps or Apple Maps was able to do, just to give us that mapping data, which didn't exist for, Gen X growing up. If you can imagine, like that, we wanted a map. We had to pull out the Rand McNally book, pull over to the side of the road, look on the large map, see which grid we're kind of lost in, and then turn to the page that had that grid on it and try to find streets. And now it's just like, oh, we have hyper realistic map data that shows you everything around you from street view, right? So now we're getting dimensional and measurement data to go with the satellite view and the street view. It's amazing, and just the storage and delivery of that technology and information is amazing. And then Tesla's working on another problem. It's working on an artificial brain that can do things after you just train it with random sensory data.
Now, the issue they have is that, does anyone actually believe that it's solved? Because the issue with the boy who cries wolf saying it's solved over and over and over when it's not, is this right here. The demand for Tesla cars will explode when they launch driverless. The reason that I have my doubts about that is because they've launched driverless. They've launched it like 4 different times. Every single time there's a new FSD update, I see it's all over X. It's all anyone talks about on X. They tried giving it away for free to all the different cars, and the take-up rate was less than 10%.
The trial rate is ridiculously low.
Yeah.
So I don't know what the holdback is there, other than the fact that people just don't check their Tesla email when it says it's from Tesla, because they assume it's something else salesy.
It's 2 things, I think. So the first is, do they trust it to actually do what it's supposed to do and do it safely? That's going to take some time. Not everyone's on the cutting edge and wants to try like the new stuff. I was talking to my fiance, and Waymo rolled out Highway, and I got early access to it. I'm willing to try that because I trust the brand that Waymo has put out there. I've seen enough CEO interviews where Takandra, she says, we're protecting our brand at all cost. They are trying to put off the inevitable first fatality in a Waymo car for as long as they can. They are not willing to risk the brand over one accident. Tesla has not taken that approach. They have tried to push the boundary, and there already has been people who have unfortunately not made it through an accident when full self-driving was on. And there's this weird dynamic where they say that it's full self-driving when it's not quite there yet, but it's also not self-driving. Right. But they've advertised it as self-driving, but on their website it says we're not legally responsible for this. So you should be watching the road. So if you get in an accident, it's still your fault. Tesla doesn't take liability of it. So it's this weird gray area where it's hard to believe what they say.
That was always going to be a thing for anytime people have to be personally responsible for something.
But so the inverse of that though is that Waymo.
So I would think of, so here's another thing to consider. Okay. The XAR glasses from Google or from Meta, or a couple other companies could make these too. Wouldn't an excellent use of the AR abilities of these glasses be to give you like a heads-up display while you're driving? Like your phone,
because you'd rather just have the robot do the driving.
Okay. Okay, but just bear with me here. Think that we're not using this as a instead of Tesla or Waymo, right? This is just for your driving your car for your pleasure. You could get significantly enhanced vision and situational awareness by the sensors on the vehicle being piped into your a form factor like glasses, right? That'll never happen. There's too much liability. Somebody would have to take ownership of if that failed and somebody got in a car and somebody got in a wreck and there was a fatality that there's no reason right now that you have to have a mechanical steering wheel and a stalk and all the gauges like they are. There's absolutely no reason from a technological standpoint. You couldn't Bluetooth it to your phone and drive your car with your phone.
Oh man, that's.
But nobody is interested in taking that liability.
Well, you don't tell me I'm wrong. You don't need to do that. Like, it's unnecessary. Like, with the mechanical things work, and we know that they work. Like, anyone who's had a phone for any period of time knows that sometimes things go wrong on the phone, and you can't have things go wrong when you're driving, because one mistake in a matter of 3 seconds causes a massive issue. Oh, yeah. Which can I finish my second point? Which the first point was that we've got this weird gray area where it's self-driving, but it's not self-driving, and we're constantly refreshing it, and it's getting a little bit better and better and better, but it's never been full self-driving. It still is not level 4. But the second point is, and this goes to the liability point, is that they're nagging you still. And I know that's getting better, but until that nagging goes away and they say, okay, you don't even have to be in the driver's seat at all. That's what Waymo has. Matter of fact, if you get in a Waymo and you try to get in the driver's seat, they will kick your ass out the car. If Tesla can get to that point, then maybe the take rate will go up. But until that nag system is completely eliminated and you don't even know it's there at all, then that's when Tesla can really start to lean into their technology advantage over other automakers. And I think that's where the game theory between the two companies gets really interesting.
Yeah. I mean, it's going to be fascinating for us to watch it play out over the next decade. There's the old adage of the difference between the scientist and the engineer, right? Is this, if a scientist tells you to take half a step towards the wall, or take a step, move halfway towards the wall, and then move halfway towards the wall, and then move halfway towards the wall, you'll never hit it, right? But the engineer will tell you, watch out for your nose, right? Don't hit your head on the wall. And the question is, at what point is regulation going to say, hey, look, this is enough? Because this is what's always going to happen. The AIs will make, especially in the early decades, the AIs will make mistakes that humans think are completely stupid and silly. And they're like, right, no human would make this mistake. But AIs will make them all the time. But the AIs are going to have such levels of precision and repeatability on the things that they do correctly that a human could never do because of things like fatigue or
distractions,
muscle weakness, distractions, all imperfect situational awareness, limits on sensory capabilities, right? I mean, imagine if there's a sentient AI that's driving a Tesla, it would have no concept of only having two eyes and having to pivot on a single rotation like we would think with a neck where you only have 180 degrees.
I'll give you another good one.
It's like, what do you mean you can't see in 360 degrees simultaneously in all directions?
So I'll give you another good one. The first time seeing a road. So if I drive in Houston, it's my first time seeing all of those roads. If Tesla is driving those roads, it's the millionth time that they've seen those roads. So it's another advantage over humans. But I'll give you two good examples of mistakes that the self-driving cars have made so far, kind of repeatedly, one from Waymo, one from Tesla, that people are just like rolling their eyes over. But by the numbers, you're 100% correct, is that both of them are already safer than human drivers. So the Waymo example I have is the standing water. It seems like they haven't cracked the code on that one yet. Waymo's driving into standing water. You know, there was big rainstorms out here in Arizona, and I think lots of people saw those clips of Waymo's just deciding that, 3 feet of standing water, not a problem at all. Let's dive into the deep end. And then the mistake that I've seen with the Teslas time and time again is it seems to be particularly on left turns. Instead of turning into the right lane, driving on the right-hand side of the road, it'll make a left turn and then drive on the wrong side of the road, which both of those are like mistakes that humans are going to look at and they're going to be like, oh my gosh, this thing is so stupid. But if you're driving perfectly 99.999% of the time, and you can eventually work out those edge cases.
Yeah. Okay. Well, we are not done with Tesla and Waymo, but I think we can move on for today.
I agree. Circling back to the Oracle OpenAI, you were looking for a hedge. You want to tell me what you hedged with? I kind of threw out an idea and you liked it.
You had a fantastic idea, brother. So I was looking at Oracle and I was thinking, if they do not, because they had this huge run up at their last earnings, right? And everybody just saw the number and no one had figured out, oh, this is all one customer. And then all that gain is now gone. Well, now what we're worried about is, so all this stuff is debt financing. Like Oracle is now the poster child of why the AI trade is exactly like the tech bust of the 2000. Okay. So the bears are now 100% sure that it's all going to zero. It's all useless. It's all pets.com. Right. And Oracle financing their AI build out is the first reason for that. So if they didn't give the most amazing guidance, they were going to, like, this was always going to happen. The price action we're seeing right now, this was always going to happen. So I was looking at my portfolio saying, that is going to bleed into everything else technology, specifically AI trade. So what can I do that is just going to eat if Oracle tanks? And I asked you, I'm looking for a hedge, and you said Oklo. And I'm like, duh.
Yeah, it's right there. Why not?
It's not. It's like somebody might have said quantum, but it's not even quantum. It's obviously Oklo. Okay. So the only thing is that Oklo doesn't trade overnight. So I don't know how bad it is right now. But if this thing opened at 80, I would not be surprised.
I can actually look it up. It didn't get crushed that bad after hours.
Yeah. So I bought puts. But it was, I think it was closed in the after-hour session before like the call took place. I mean, if you look at the Oracle price action since then, but so I opened some puts and actually closed a tranche of those out for a 40% gain just today. And when I say puts, I mean expiring this Friday. I think $90 Oklo puts.
So it's trading at just below $98 right now.
Okay. So yeah, when we open in the morning, I mean, look, I'm going to make a lot more money if we just stay still than if those hit. But if the market decides to pitch a fit, they decide all of a sudden, oh yeah, the FOMC rate cut that was already priced in. We're worried about the AI trade being totally fake again. Yeah, I'll have an exit there.
And I agree with this comment here from L Jam Beck. Nobody figured out how they were going to pay for it. I think they kind of said, let's build it first, and then we'll figure out how to pay for it afterwards. At least certain companies did that. Obviously not everybody did that. There was definitely some companies that were more prudent than others.
Yeah.
And some companies have done a lot better job of actually putting together a business plan that's growing revenue, like Anthropic. They've done a much better job, and Palantir as well. They've done a better job of scaling up their revenue, whereas other companies they've just been building product and getting users. But we'll see what monetization.
Also starting to write some checks. I don't know if their bodies can cash, but El Jambek said this is more of an Oracle problem, and that is a little true. The rest of the Mag 7 can pay from free cash flow, but Oracle is not that far outside of being like a Mag 7 type company, but they're trying to keep up with the Joneses, and just no one else can. So I do agree with you that it's an Oracle problem, but are more and more people going to try to buy their way into this build out with buying either ASICs or GPUs, and have to finance those because not all companies are created equal in the Mag 7 or the Mag 7 for a reason, because they're cash flows. What say you?
I don't really have an opinion on Oracle, the name itself. Obviously, a lot is dependent upon their customers being able to pay them. We'll see how real that backlog is. But I do have an interesting chart to show, which is free cash flow from Oracle. So this is the free cash flow chart.
Okay.
Let's see if I can zoom in here a little bit, get a better view of it. So some big time negative free cash flow numbers coming in the last few quarters. So it looks like they're paying for some of this stuff with a lot of debt. So that's why you got questions in the earnings call about it. Again, yeah. This is the trailing 12 month same chart.
Look, if people were not always trying to find the next giant bubble and look cool for being the first one to call it, no one would be batting an eye at a company trying to build out a massive change in the way they do business and the products they offer and using debt to finance it.
So you got $82 million of debt.
Someone is going to buy a laundromat and they use debt and they go into debt to finance it. No one is batting an eye at that. Like, if whoever is going to start a new software company and they have to go into debt to get office space and get their business started up and buy AWS services and all the expenses that they're going to burn cash for a long time, and no one's going to bat an eye at it. So why does Oracle, who is certainly they're a technology blue blood, why is Oracle the redheaded stepchild that everyone's beaten up on? Because they're using debt to finance what they believe to be a staying alive and competing in what they believe to be an existential not threat, but not
it's probably this
threat.
It's probably this. I mean, look at the top line. It's not super impressive. It's just not. It's a big number.
They had problems before this too.
Right. But, in terms of, GPT getting launched and Oracle supposedly being a huge beneficiary in that regard. I'm looking at the last 7 quarters in a row that they have not grown double digits. These are all single-digit growth quarters. That almost in some way gives some credence to the people who want to make the argument. I don't believe in this argument, but gives credence to the people who want to make the argument that how much revenue is this actually generating and how much value is this creating for the downstream value layers.
True. The other way to look at it is, hey, they've only been growing at single digits. They have to make a major play to get back in the game.
Yep. While we're on the Ellisons, did you want to kick us off with the Netflix, Paramount, Warner Brothers, Donald Trump saga? This is turning into a soap opera.
Yeah. I'll start us off on it, but we were talking before the stream went on, and you were feeling some type of way about it. So I want to get us back in that mindset because you had some spice going on. So this, what was it? Last week we got the news that that Netflix had made a proposal to Warner Brothers, and it had been accepted. And so I think we spent a couple of days trying to figure out what Netflix was really buying, whether this was actually good for Warner Brothers, whether it was good for America, whether it was good for entertainment overall, or if it was just just a business deal. And it is a huge move obviously in the content library. I was a bit skeptical on the requirements that they would have going forward, that they would have to live up to maintain the licenses that they'd be receiving with Warner Brothers. As I don't particularly find Netflix's movies or shows model to be that good. Is it good enough to sell you a subscription for $15 a month? Yes. Is it good enough to make culturally definitive IPs? I don't think so. Occasionally they've had a couple, but do you even remember what the main character's name of Squid Game was? No.
Squid Game slander?
I mean, it was great.
That show did numbers,
we
right?
binged it so hard for the first season. We binged it so hard. But no one remembers what happened. The only character I can name you from Stranger Things is 11. You'd think I'd also at least be able to name the kid that kept getting lost in the Upside Down, but I don't. It was the only character I even know the name of.
His name might have been Mike.
Yeah, Mike was the boy. Good memory. So that was last week. This week, Paramount fights back, and they are going to try to buy, in a hostile takeover, they're going to try to buy Warner Brothers before Netflix can get their deal done. So this is getting kind of spicy. I think everybody knows Warner Brothers content is a honeypot. Paramount also knows we can't be on the wrong side of Netflix owning that library. So what I'm unsure of right now is who's taking what in what deal. I've heard things like if Paramount gets them, then if Paramount just has a hostile takeover, they're just buying up all the Warner Brothers shares, and they'll just own the company that way, right? So they will own everything that Paramount or everything that Warner Brothers owns. The Netflix deal was going to leave some IPs and IPs along, but some channels on the table, right? They were going to leave the television channels. Netflix doesn't want television channels. They were going to leave CNN on the table. They don't want that. It's not their core business. Now, they did say they would get the theatrical releases and that they would continue with theatrical releases on those properties. I don't know if anybody really believes that after they kind of fulfill their initial obligations to do so, but yeah. And then today, somebody got asked a question about how they feel about the assets being transferred, and they had an answer. What was that, Austin?
Yeah, so Donnie T is getting very specific about CNN. For obvious reasons, he cares about what happens with that. But let me rewind the clock a little bit, tee this up. Back in June, when they first started doing these negotiations, Warner Brothers was already going to split from Discovery. So you were going to have Warner Brothers Studios and HBO on this side of the aisle. You're going to have Turner Media, CNN on this, and Discovery Channel. Anything linear cable was going to be on this side. So you're going to have two different organizations, and Netflix was going to buy this slice for all the accretiveness that was going to be available. And instead of licensing the content, they could just put it on their platform. You could cross-sell from HBO to Netflix, Netflix to HBO. You could bundle, and Netflix was going to get a studio. If you give this company to Paramount and Paramount wins it, they would actually have a bigger market share than Netflix would if they bought HBO. So if Netflix buys Warner Brothers Discovery, they move up to a 13% market share. If Paramount Skydance buys the organization, they move to 14%. So I just don't have any tolerance for this argument that Netflix buying this is going to cause a monopoly, when, in the other hand, people are saying, well, Paramount should be able to buy them, but not Netflix. Paramount plus Warner Brothers would be bigger than the Netflix acquisition. The other thing is, the president is saying, well, what was the exact quote? I've got it right here. He said, any deal that happens should include the sale of CNN. Netflix is not buying CNN. And if I was Donald Trump, I don't understand why he would even want woke Netflix buying CNN. You would rather have them.
CNN. He's just tired of CNN. He's just tired of their leadership.
Right. Which is why I think a potential likely scenario is that the Netflix deal goes through, which, by the way, one of the Netflix CEOs says that he's very confident that they'll get the deal through. But if they don't buy CNN and Turner Media, that it will still be on the table. So if Paramount wants to buy Turner Media and CNN, they can still do that even after Netflix buys HBO and the studio. The other thing to consider is, if Netflix buys the studio, now you've got competing studios, one at Paramount, and Warner Brothers is still competing with them over at Netflix. If Paramount buys the studio, now you've got two studios at the same organization. One of them is going to get cut, and now you have one less studio because they're not competing with each other anymore. So right. if there's any example of anti-competitive mergers, it's the Paramount one. They would have bigger market share. They would control more linear television than any other company, and you'd have one less studio.
Yeah, but you forget the Ellisons are in control of Paramount.
Yeah, and that's where I started getting a little bit fuming, because, not to get too political, but the Republicans used to be the free market party. They used to be the party of small government. And now you have a president that is micromanaging the details of a merger. We just went through this for the last 4 years where they didn't let any mergers or acquisitions go through. And now we're having to deal with it again because it doesn't suit the president's friends. I don't like it.
Yeah. What part of Donald Trump as a Democrat do you not understand? He always has been.
That's my feelings on that. I wish they would stay out of it because, quite frankly, either approve it or don't. But to say, oh, it needs to include CNN, that just rubs me the wrong way. The Ellisons can pick up CNN after the deal goes through. But as far as the terms of the deal, so let's talk about how this plays out. Paramount is borrowing $52 billion from 3 different companies, Bank of America, Citi, and Apollo. That's where they're getting the money for this hostile takeover bid. If I'm a Warner Brothers shareholder and I have the option to choose between Netflix paying in cash or having 4 parties bundle together their money and then buy the assets with leverage, it would have to be an extremely compelling deal to go for the one that was financed by multiple different parties. The other thing to consider here too is that one of the deals is already inked. Netflix and Warner Brothers already have that deal done. If Warner Brothers backs out of that deal, they actually have to pay Netflix $2.8 billion.
Pay a breakup fee. That's the other thing that gets totally weird here too. Is somebody's getting paid. Somebody is going to get paid a lot of money. And Netflix probably gets paid one way or the other. It is worth noting, though, that the artists and the actual people that make movies are pulling pretty hard for Paramount. The movie industry does not particularly like the Netflix model of doing business. So that is, if the quality of your entertainment actually matters to you, you probably do want this to go to Paramount. Because Netflix is AOL. Like, this is the second time in my life I've been seeing Warner Brothers being, treated like a goat. And this is because AOL bought them for a song, back in the day, and then AOL obviously, was AOL Time Warner, and then it was just Time Warner again. Time Warner outlived the technology company. Will they do it if they're bought by Netflix? Will they do it again?
Just as a free market person, though, in general, unless there's a good reason for the regulators to put the kibosh on this deal, the regulators shouldn't be blocking deals just because, either their friends were too late to the bid, or B, because you have a suspicion that Paramount's going to run the new studio better than Netflix. I'm sorry, that's not a good reason. That a merger or acquisition has never been blocked because we don't think that the new company is going to manage them as well, unless it's an insurance company or a bank.
So I'm just making a point. I'm not taking a side. I'm just expressing what a point of view is there.
Right.
And it's one I'm not unsympathetic to, but I do see both sides, and I make both arguments at the same time.
Now, let's talk about how really just like the stock price. And again, the show is not advice, guys. This is an entertainment show, just Dougie and I chopping it up. So do your own due diligence. But we do have to talk about the price action of the stock here because it's traded down significantly. It was at $132, and now it's all the way down to $92. This is the biggest drawdown that we've seen on the stock since the whole subscribers number fiasco, where we saw the stock drop 75%. So this is the biggest drawdown in over 3 years.
Yep.
We are now sitting at a 30 forward PE, and we are also sitting at a 44 price to operating cash flow. So this is historically the cheapest that Netflix has been since that 2022 free fall, you could even call it. This is the cheapest it's been. Now,
I've been in it for most of the year, and I got out in early October, but I'm seriously considering getting back in because it's just it's just priced too well right now. Like,
yeah, so let's talk about that. It's been trading down, and here's how we can play out the different scenarios and what would be good for the company and what would be bad for the company. Deal goes through, Netflix gets the company, and it's accretive to the business long term. They take on some debt, they pay it off because they free cash flow $8 billion a year, and then they get all this access and all the synergies that come with the IP.
And Friends is back on Netflix.
Yeah, and they get the distribution, and that's going to help them retain customers. It's going to help their pricing power. It's going to help lower their cost for licensing fees because they won't have to pay for all this HBO content that they then have to license. So that's obviously best case scenario. Scenario B is, Paramount and Ellison's win the proxy war. Netflix gets $2.8 billion, and then their business goes back to the same as normal.
They have a larger competitor who has, they do have a competitor who has got more ammo, but yeah, at the same time, they have billions more in the bank.
Right. And keeping in mind that, Turner Media and Paramount both are heavy in debt. They have linear cable channels and all the baggage that comes with that. So it's very, asset and debt heavy relative to the structure that Netflix has as a technology company, where they own distribution and marketing, and then, just based on a subscription model. Whereas Paramount and Warner Brothers both share the model where it's, more old school. It's your cable 1.0. And Netflix just wants to buy the good part of that that's going to help their business, and then split off Turner Media and Discovery. So I think in the event that they don't get the deal, it might weigh on the stock in the short term for a year and a half, something like that, while all the noise is circulating around. But this doesn't matter for the company long term. If we fast forward 5 years from now and Netflix doesn't get these assets, it's not a negative. Yes, they lose out on the positive of what could have been, but it doesn't actually hurt the company.
Netflix did its 10-for-1 split before Warner Brothers was for sale. And Netflix was $110. They did a 10-for-1 split, and next was and that price went to $110 before Warner Brothers was for sale. So the fact that they're not getting to buy Warner Brothers, if that is the reason you're telling me the stock is what, 90 something today,
92.
That's crazy. Nothing happened to at a minimum. Nothing happened.
Yeah, and that's why I don't understand. How can you sell it from 130 down to 92 because they didn't get to acquire something that they wanted to acquire? That's a little bit mind bending to me. And the reason it's mind bending here is because of the quality of the company that Netflix is. So I'll just go through this real quick for those who aren't aware of how strong fundamentally of a company Netflix is. Here's their revenue. So you're looking at a 4x in revenue over the last 8 years, and they've doubled their revenue essentially since COVID. If you look at their operating income, since COVID, they have again over doubled their operating income from 5 billion, 5.5 billion up to 12 and growing. If you look at their free cash flow, again, same trend here. You're going from basically break-even technology company in terms of free cash flow to now trailing 12 months, $9 billion of free cash flow. You look at their gross margin, expanding gross margin. For those of you who don't know how powerful it is to have an expanding gross margin, read up on this, because a gross margin is where everything starts, and then everything else on the income statement funnels down from the gross margin. Speaking of which, the operating margin. Since 2018, we have gone from 10%, so barely double digit, to now we're looking at 30% operating margin here. And the trend line is working in the favor. and then bringing that to the profit margin down to the bottom dollar. Again, all these margins are expanding in a really rapid way. You've got a 24% profit margin. These are incredible numbers. And Netflix is, they're a relatively young company. They haven't hit their total addressable market yet. Not even close.
So one thing does occur to me and this would be maybe one of the cases this stock is behaving like it is, or what potential investors are considering. And it is not something I had even considered when we were just kind of doing our little rant about it. But that is maybe Paramount takes their ball and goes home. Netflix's golden goose, the whole reason they exist is because they saw a market for people to watch shows and TVs online and watch. Basically, people wanted to watch old shows and old reruns whenever they wanted. The networks and the property owners of all that stuff weren't making any money on it, so they were giving the licenses to stream it away for a song. Well, Netflix did what Netflix did, and then all of a sudden everybody wants their own streaming platform, and they've got to develop their own vertical on their entertainment. Well, that forced Netflix to go start dabbling in making their own content. Well, brother, if they lose out on another partner that they could at least license content from, and maybe Paramount's like, well, you can only you can license 10% of our library. Well, they just lost a whole bunch of or Netflix is going to have to make a choice, and they're going to lose pricing power on a whole bunch of the kind of the meat and potatoes Netflix content.
So as of right now, Paramount Plus has 79 million subscribers, and I think I saw, HBO has 128 million. So if they decided to put those two together and license out zero of the content, they would really have to push hard and make whatever new app. I'm sure they would find a new name for it, Paramount HBO Plus, whatever it would be called. But they would have to really make a legitimate run at the king. And you know what they say when you come for the king? You better not miss. Because if they decide to make an enemy out of Netflix and they don't license anything to them, the game is on.
Yep. And it is also in their favor. Because Netflix does not know how to make stuff worth paying for.
See, I disagree with that. I went through the catalog the other day and I just flipped through stuff. They have so much content on there. They're
gonna have AI. They're gonna have the equivalent of AI slop. It's kind of what they already call it Netflix slop.
No.
I mean, my love for K-pop Demon Hunters. That is well documented.
I do. And that's why Netflix is going to maintain their leadership position, though, because no matter how many times I hear people complain about there's nothing on Netflix. I went through it the other night. I don't watch TV that often. I went through it the other night and I'm like, there's still 50, 60, 70 shows on here that I hear people talk about all the time. And anytime that I hear someone complain about, the Netflix content is getting stale and there's not enough here, my immediate follow-up question the last month has been, do you still have Netflix? And every single time they've said yes. Every single time. Not a single one has canceled it.
For sure. It's one of the last things to be canceled. But ultimately, consumers will make the change. We saw that when they cut the cord to begin with. If you do not provide value to the consumer, they will make the change. Now, we have a society that has gotten real used to having subscriptions because it allows people to be lazy And we both know people that have subscriptions to all kinds of stuff that they don't even use. They don't even know they have a subscription to it.
I guess my point is, yes, the value has to be there, but I think with a lot of products, you hear a lot of bitching and moaning.
So
about certain things, and at the end of the day, if the value wasn't there, people would be canceling their memberships already and their subscriptions, right?
So right now it's equal to everything. So right now you've got to have a Prime, you've got to have a Netflix, and you really need to have a Paramount because the Taylor Sheridan shows are generally excellent. And if you want to watch the Olympics, you've got to have a Peacock subscription. Like that cannot continue. We're back to, you have to buy individual packages. Oh, and you also have to have a YouTube TV for sports, and then a Disney Plus / Hulu. Okay, so this is completely out of control, right? And Stars is trying to get in there, but like Netflix has got to find somebody that knows how to make stuff that's good, because if you look at all the shows that Netflix makes, these are not the good ones. Furthermore, when they do make something that's good, they make 8 episodes of it, and then it is years before they make another season of it. Years in between.
I agree with you that
like 8 quarters have passed between the previous Stranger Things and the current one. Now, did their economics make sense where they were collecting, the pennies that people were still buying or maintaining their Netflix subs because it was still on there, and like it was just in your queue to watch and no one had done it yet, or somebody hadn't watched it yet and they eventually got around to it? There's some of that for sure, but they're losing pricing authority.
I disagree.
They may have to go. And then let's look at, okay, the biggest property in the world this year. It's the newest IP. It's the biggest. It's the number one. It's the most streamed minutes on Netflix ever. It's the most streamed animated movie ever, regardless of platform. And that's ahead of any Disney or Pixar anything. And this is such a botched effort. They have no merch. The number one kids movie. It has been the number one kids movie all year. There is no merch for the holiday season.
Yeah, I just disagree fundamentally about the pricing PowerPoint, because of all the subscriptions that you mentioned, Peacock, Paramount, Disney, for most people, I think Netflix might be the last one that they cancel. And even if the content engine,
the last one they cancel.
Maybe it's different for you, but for most people, I think Netflix is the last one to go. And then on the content engine.
And you could watch Friends and The Office, and you could watch all these old reruns that had, 9, 10, 11, 12 seasons of stuff that you liked, or, all 12 seasons of Home Improvement, or, it just had massive content library. And if that disappears, if the backlog, not even counting the new stuff, just saying, if the massive backlog of quality shows that you just put on disappears, then Netflix is in trouble.
Well, they can just continue to license new content. So while I agree with you, like, it would suck to not have that studio there. They would like to have that studio. Absolutely. It's a legendary studio. If they are not producing the new content like they haven't been, they can just continue to buy content from other people. They did not even produce, I think it was K-pop Demon Hunters. They bought it off Sony. So that is evidence that they can simply find a hit because they have the distribution and ability to get it out there. And the other thing that they have too is live events. So other streamers are doing live events, but so is Netflix. And Netflix, quite frankly, they're just better at marketing and promoting those events. If you look at the Christmas game last year, the football game, If you look at the Tyson versus Paul fight, I mean, hundreds of millions of people tuned in to watch these events. And that's something that Netflix is going to have for forever. So even if they don't have the strongest studio, can they build one of those? Yes, they can. And they've been doing just fine without it. Like, you have to remember, like, the fundamentals that we just looked at from their income statement, they haven't had a studio that's top 3 studio this whole time, and they've been doing just fine.
But they've had the backlog. They've had the old comfort TV shows. They've had The Office. They've had they haven't had them lately, but
Dawson's Creek.
Dawson's Creek. Okay. Shout out to the legend joining the chat, by the way. Yeah, so they'll get Dawson's Creek right after they get High School Musical 4 or whatever it is.
Is there even a 4th one?
I don't know. Ask Amit. Amit, you're the expert. Is there a 4th High School Musical?
I feel like we're gonna get flamed just for not knowing. But I guess the point is,
I think we get flamed for knowing.
I think the point that I'm making, though, is that even without the giant content engine that they would be getting from Warner Brothers Studio, I think that they're doing just fine with the strategy that they've been employing over the last decade, which is license and distribute. That's their strong suit. They're a technology company first, content producer second.
I agree. If they can maintain a pipeline of good stuff to license, they'll be fine.
Yeah.
But that's why I'm also kind of okay with them not winning the bid, because I don't respect their content that they actually make. Certainly not as much as I respect Warner Brothers and Paramount.
Agreed.
Yeah. So, all right, well, we can.
Yeah, that wraps Netflix.
That horse pretty good.
You want to talk about Meta?
I mean, I bought shares last week. I think we covered that in the last show.
Yeah, basically, if you believe in Zuck, this is a decent spot to take a stab at it. If you don't believe in Zuck and you think he's going to waste money, then you don't. I think that sort of summarizes
they've
the whole thing.
They've got a new model coming out, right? I think they're going back to monetizing models instead of making open source ones. I may be wrong on that. I actually have not been paying attention to the meta news this week with everything else that's been going on.
Got it. Keeping it moving right along to Amazon. Amazon still flat. This might be the most sleepy the stock has been for like an extended period of time for quite some time.
I don't understand. Oh, by the way, and that's the last subscription anybody gives up, because it's a great library. It's MGM and all your deliveries. So, if you got to tell me I got to choose between Netflix and Amazon Prime, bro, it's not a choice.
Well, and that's just another argument for the fact that, like, if Netflix were to acquire them, it would not be a monopoly, because you have Prime, Hulu, Paramount, Peacock. I mean, it's YouTube, TikTok, Reels. Like, it just goes on and on and on. So, yeah, this whole monopoly argument, goofy. But yeah, Amazon still chopping around. I have been eyeballing options, Doug. If the volatility stays,
some calls in there.
I have done some calls. I bought calls right before the last earnings call, and it obviously went really well. And we got the OpenAI deal, so it popped from 220 all the way up to 250. And 2 days after, I unloaded it.
Sold all that right back out from under everybody with you, apparently.
Yeah, I sold the rip, and I got back into shares. I took advantage of the pop, and I got off the leverage.
Good play.
I'm eyeballing it again, because it just, at a certain point, it seems inevitable. I think that's kind of the consensus right now. Yet the price isn't moving up.
Yep. Well, from what I'm hearing, if we go back, we know that Jeff was kind of a covered call option on the stock for the better part of 4 years or so.
Right.
As he was raising money to pay for a wedding, and or start a space company. I'm not sure which was more expensive.
Definitely Blue Origin.
Yeah, definitely. Okay, definitely Blue Origin. Now,
but Mackenzie's selling too.
Now, yeah. So, and she is enjoying a lot of very positive press coverage right now too for giving away a lot of money.
Right.
And I just wanted to say, folks, don't love this woman too much for giving away money because she's selling your S&P 500 shares.
Dougie hates philanthropists. You heard it here first.
She is getting famous, and she is enjoying being a philanthropist for getting divorced and then selling down all the shares that you're buying, whether you own Amazon or not. If you've got SPY or VOO or any broad market, you own a lot of Amazon, and yeah, she's selling that out from under you and keeping it.
We are
just gonna tag team, and then like when she's done selling, like Jeff's gonna have a new he's gonna get divorced, so he's gonna have to sell a bunch to give to Lauren. Like, I mean, are we just permanently gonna be stuck with the founders selling off shares?
These are all short-term issues, right? It's just a
I agree. They're obviously not structural. They're not business issues, but they're related to. So this poses an excellent contrast with a company like an Apple that is reducing the share count. Right? Amazon's not doing that.
They never have, and they probably never will.
They never have. I mean, let's never say never, but certainly Amazon still thinks they are expanding into new territory, and they are using their cash to invest in their business. They're not paying the shareholders with it. If you want to make money on Amazon, you got to sell shares. And that's what the founders are doing. But yeah, can you imagine like if Palantir sold as many shares as Mackenzie did? Like, people would be going insane.
Yeah, I mean they do every single time. Karp sells like an eighth of his shares or a tenth of his shares.
Whenever he has his planned sell. Same with Vlad or one of these other companies, right?
But Amazon obviously presents the opportunity for a few megatrends. So megatrend number one, e-commerce. That's still happening. E-commerce 6 years ago was about 10% of all retail sales. Now it's up to 18%. That's a solid trend line that's only going higher. Not going away. They have put in all these CapEx investments into fulfillment, robotics, automation, warehousing, and fleet. Yep. So now they are, at least in the United States and probably around the world too, the de facto shipping company of the entire world, and does so at an efficiency that nobody else can match. They have over 1 million robots already in service. So they have physical AI already in use. They have a self-driving project that is doing live rides in California called Zoox. If they can apply that to their fleet itself, and you get a robot inside that Amazon truck, now with Amazon having over 1 million employees, that's kind of a scary but also really efficient opportunity that you have there, where you have hundreds and hundreds
the
of
robot
thousands.
Drives the car, and the human just does the last 10 foot of the delivery to like literally put it on your doorstep or whatever.
There you go. Exactly. And that would massively increase margins. You have them owning an advertising business. So all these businesses work together because you advertise using AI and recommendation engines that have been improving. So you get the customer, you send them to Amazon.com, and then when they buy, it gets fulfilled at an Amazon warehouse and gets delivered at your door. So they own every single part of the value chain. So you have a vertical integration story at the same time that you have an operating efficiency improvement.
It's an amazing logistical and operational achievement in all of humankind.
Yeah,
and it is global. Like, I mean, at least in the United States, like, who doesn't have 2-day delivery? And I'm being serious here. I would be curious. Is there like a map overlay of the United States that shows where like next day delivery is not available?
That is a great question. I do know that they recently announced that they are going to be expanding more.
2-day delivery is blankets the entire country.
Yeah, I think 2-day delivery or maybe 3-day delivery is the whole country. But 1-day delivery is probably like half of all households in the country. And then 2-day delivery is going to capture, everyone outside of a major metro area. And they're working on expanding that network outside of major metro areas as well. Yeah, so if you live in a major city, you're already getting it same day.
Crazy. That's crazy.
And then the fourth one, the fourth mega trend on top of all that is cloud.
Yeah. Oh yeah. They just have this other little business.
This other tiny little business that does $100 billion of, revenue.
It's like we were already doing this anyway, just to run all of the servers that manage all of our data. But since we were doing this, we'll rent y'all some more space in our building. And I guess we need a new building because we do such a good job with the product we offer. And more buildings. It's an amazing. And I like being a shareholder of Amazon. I just wish the stock performance would reflect the achievement in operations and logistics that they've achieved.
Short-term voting machine, long-term weighing machine.
Yeah. I know it will long-term. I have too many of those investments in the portfolio right now that I don't know, maybe I'm sure I got spoiled by Palantir and Robinhood finally running. Like, I remember Palantir like having a good earnings and tanking on the same day, and I remember Robinhood having good earnings and tanking the same day, but I don't really remember it now. You know what I mean? Like my expectation for how my life works and how my portfolio works is, we put good numbers up and to the right,
Yeah, you buy the stock and then it immediately rips. That's how the stock market works, right?
Yeah, buy the stock. Yeah, they put out an earnings report that is sexually alluring, and and the stock rips and pays off for it. So I wanted to go one step. If we're done with Amazon, I wanted to go one step back up. And just touch on something you and I had talked about when we were talking about starting the show, is doing some like financial education or just getting into like financial books. And so I read the NVDA Way, and by read I mean I listened to it.
That counts.
It counts. So obviously you don't have an opportunity to like go back and reread something and like take notes on it, but I do not understand why I was not buying this. I understand why I personally was not buying shares during a certain period, but my first NVIDIA product that I owned was a Riva TNT chip in the late 90s. And they were the best. I had no idea how close the company was to going out of business at that time. I had no idea how close the company had been to going out of business before that. So anyways, this is a really good book that is both a kind of a Jensen biography and the story of NVIDIA. And it's written by a journalist who did a whole bunch of interviews with both current and former employees, some people who separated well, some people who separated not so well. But it provided me a lot of clarity on things we're looking at this week, even with NVIDIA going and, worrying about China, how they're going to get that in, what's going to happen with that market. the threat all of a sudden that TPUs and Google suddenly pose in the minds of the market to NVIDIA's GPUs. And I just got to tell you, after seeing what Jensen has done time after time after time in his life as a CEO of NVIDIA, these things don't matter.
Yeah, a lot of short-term noise.
Yeah, a lot of short-term noise. This used to be a gaming company that he kept looking for. So he kept looking for new like markets within the gaming company, new ways to sell the products. New deals to be made inside the gaming space. And then here comes CUDA, and all of a sudden we can use GPUs to do other things. Basically, we can use a bunch of GPUs to make a supercomputer performance for people doing research and all kinds of other things that were no longer that you used to have a supercomputer to do. So if you're at a university and you're the department chair, you can get supercomputer time for your, gene research, right? But if you're a small time research fellow and you've got, some harebrained idea, but you need supercomputer time, you were never going to get that. Well, now you could cluster 4 GeForce 256s together and you can get performance on par with what the supercomputer was getting you. And Jensen's just ability to recognize where the puck was going and get there. And his ability to learn lessons from early failures at the company also really sticks with me. I mean, he's Steve Jobs and Donald Trump rolled into one. And his ability to and his delight in making deals is the Trumpian, and just I am not here to make you feel good about yourself. We are going to make the best products in the market, and we're going to sell them better than anybody else does, and we're not giving away any margin on anything to push volume. We're going to make a new market rather than give up margin.
Unbelievable salesman.
He's amazing. He's amazing.
Fantastic leader of people. Really treats his employees the right way from everything that I've heard.
If you like working 80 hours a week.
Yeah, if you're dedicated to your work and you want to do something important, he's your guy. If you want to slack off and work 37 and a half hours a week with, 10 hours of that being like thumb twiddling, probably not your place. But if you want to make a dent in the world of computing, and I think people have this idea because they hadn't heard of NVIDIA until a few years ago, but they think of it as like this young company that just like came out of nowhere, out of left field. And like there's this leather jacket guy going around playing rock star. And it's like, no, like Jensen has been a boss for decades now. Like he's been building up this company, and he is one of the few CEOs that has seen the ability of what the company could become like decades in advance. Like he saw this coming the whole way. It's really insane. Like if you go back and you look at some of the old clips, even from like 2014, he's like, oh yeah, advanced compute is going to, clean up data center. And people didn't see it until like 2021. So then you've got like Joseph Carlson and Michael Burry coming out and saying like, oh my gosh, this revenue ramp, it's not sustainable. It's like, no, they built everything that they needed for decades to make this happen. And here it is.
And Jensen doesn't care about the revenue ramp. I'm just telling you, he does not care about things as petty or as like micromanaging as that. He's very Carpian as well, as in like we're just here to take the whole market.
Yeah, we're going to create value and then take a slice of it. And I think that's honestly the best way to describe the best technologies companies in the world is that they create value and then they get a slice of it.
You want to know how much of a killer this guy is? When he was 9, his parents sent him from Taiwan to the United States.
To Kentucky, right?
Yeah, to Kentucky.
Of all places.
Yeah, to like it was like some Baptist school for boys and his parents thought it was a boarding school. It was not a boarding school. It was a reform school for boys. His parents sent him to the United States to juvie. His roommate was like 8 years older and was covered in tattoos and scars from being in fights. Like, that is what Jensen grew up in. All right, y'all. He does not care about what Michael Burry says. This guy was honed as a child. And he's also really smart computing guy, but he's not. I mean, he wasn't a Stanford genius. He was an Oregon State guy, right?
Did you have any thoughts on the NVIDIA newsroom coming out and publishing the response to the TPUs, basically saying, yeah, we sell to Google, they're still our biggest customer.
Yeah, of course they are, because they're general computing.
Well, I know some people had like a negative response to that, and I thought it was perfectly fine for them to come out and remind people of some basic facts.
Yeah. Hey, look, it was enough of a response that Chris Patel finally bought NVIDIA. Okay. The guy who said it's all cyclical and you can't touch this thing since it was, $100 pre-split. Okay. Yeah. He's just amazing. I bought you the audiobook as well, by the way. So I don't know if you saw that link. Check your email.
I did not. I will have to check my email because I will listen to it.
I bought it to you on Audible. It was on sale. It was like $2 or something. I was like, okay, I'm buying this for everybody whose email address I know.
Perfect. I'll listen to it when I'm punting money away at the poker table. How about that?
Yeah, that'd be good. Yeah, when you get to chapter 1, you'll hear the story about the boys' school, and you'll be like, oh yeah, this dude is he's not here to play around.
Yeah, I know the story at the Cliff Notes.
He cleaned bathrooms. He worked at Denny's, waited tables at Denny's, and he cleaned bathrooms. He says, I'm the CEO who's cleaned more bathrooms than anyone else. There's only, at the time of the writing of this book, I think he was like the 4th longest serving CEO, the 3rd or 4th longest serving CEO in the S&P 500, and one of those is Warren Buffett that's ahead of him, so like he's been around for a very long time. But yeah, I'm gonna try to ingest some more like financial books, some more biographies of financial titans, as it were, and see if we can just spread a little information on that. Tell you what's good. If you want to consider the book, it's very easy to consume. It's very much told in a narrative format. There's not a lot of like dense financial or computing information, so very readable.
And of course, if you want more of that dense information, I highly recommend watching the GTC conferences, both from DC this year and from Taiwan. I want to say like 7-8 months ago. He did a really, really good job of explaining the opportunity that they're going after, why they think it's valuable. I really recommend those. It takes a little bit to wrap your head around of like what he's talking about. Like, what do you mean advanced compute, and how is that different than normal compute? Like, you do have to do some homework there to get the idea. But I don't want to get too much into it. But the name of the book, once again, is called The NVIDIA Way.
Yeah, I'll post it in the chat here, so folks can.
And we'll be covering more books. I've got a list of books here on my shelf here that we'll dig into as well. But yeah, what else about NVIDIA?
Well, they were another company that we kind of touched on earlier. Is like they kind of peaked at the in early October with some Fed folks coming out and saying, "Oh yeah, we might not do the cut," and then those assholes all voted for the cut, and NVIDIA's price didn't recover, but they sure did send it down on their news. But
well, that was also around the same time that Sam went on Brad's podcast and that whole thing
yeah, true.
unfolded.
So that's another thing is Jensen is not going to allow OpenAI, whether they win or lose, to take his company down.
Yeah, no way. No way. He's not betting his whole company on Sam. Not a chance.
He's not going to let a administration or a government stop him from selling GPUs. He's going to sell the GPUs. I mean, he's going to do it legally, but he's going to sell the GPUs. He's going to get the deals done to sell the GPUs where he wants to sell them.
Playing that fiddle, baby.
Yeah.
He's underrated salesman. Honestly, he's like people give Cook credit. You know, like Dan Ives will call him like 30% politician or whatever. I think Jensen has just as much skill in that realm.
The godfather of AI.
Yeah, the godfather of AI. I think he's done just as good of a job of, trying to sell product, but at the same time not stepping on toes. He's managed the whole situation very well because it has been a really tense one.
John Javery says, do you think there'll be a day when individuals need GPUs? Well, that all depends. Do you need an LLM right now? Because if you do, then yeah, you need GPUs. You need them in the cloud. You don't need them personally, but yeah, I mean because they're general, right? So you can do anything you want with them. CUDA is there. You can program a GPU to do any high-purpose computing you need that needs to be done, and you can have it work much faster than a CPU can, because it's not trying to run your entire operating system at the same time.
Or you can just rent some compute from a data center in space,
right?
It'll be
which is using GPUs. Where they are co-located, I don't think matters. So I mean, you might as well ask me, do you think there's a time when individuals will need web servers? Well, I mean, you can put a web server in your house and run a website, but it's just easier to use Squarespace or Wix or whatever, right? I mean, it's just easier. So,
or Shopify. Can we switch gears?
Take it away.
All right. So we had Black Friday. First let me back up. We had lots of angst around the consumer about value propositions from companies like Walmart and Amazon saying people are trading down. We saw Chipotle get smacked. We saw a few other companies that sort of took a beating, and everyone sort of raised the question, as seems to happen every 3 to 6 months. How's the consumer doing? Why is credit card debt so high? Everyone's paycheck to paycheck. Is this finally the time that it all unravels? Black Friday came and went.
We had 9% inflation. Of course, everyone's credit limits are high. Everything costs more, but everyone's paid more too. So like, it's just $1 is not what it used to be. Sorry, go ahead.
Yeah, they printed the dollar into oblivion. But Black Friday's come and gone. Shopify has posted their numbers. I think Amazon came out and said that they had positive numbers. The Bank of America CEO just today came out and said, we don't see indications of consumer stress. And on the back of that news, Shopify was up 5% today, almost hitting all-time highs. They also released a new product too. So, you're going to have some lift from that too. But
what was it? Was it consumer facing or was it?
Yeah, so the Shopify product that they released is essentially a digital twin shopping agent. So if you want to A/B test your product or your website or whatever features that
that's the thing you're making me. Okay, I didn't realize that was Shopify.
Exactly. Yeah. So
it's the Sims, but like if it's the Sims Business Edition.
Yeah. So if you're wanting to A/B test what works better for traffic or conversions or making sure that you're not leaving empty carts, there's now a feature on Shopify where you can A/B test those different things without even having to publish these live on your actual website. You can simulate the traffic, and the AI is meant to act similar to a human shopper, or at least a cohort of human shoppers. and give you a good idea if, version A works better than version B. And it's probably not going to work super great in the first year, but as Dougie's Law indicates, this is the worst that it'll ever be.
Yep. Well, and then also, like we said, it'll make mistakes that we think are really silly, but it also is working with more information than we can possibly imagine and is able to process it and do things with it that we can't with our own single minds.
One of the other companies that has benefited from this lift is AppLovin. So I know we talked about it last week. I'll just hit on it again because it's up about $100 per share since we talked about it, gone up from 600 back up all the way up to 700. Yeah. It almost hit new all-time highs yesterday.
Out of the bottom. I sold the bottom. So
it happens. Sometimes you do sell the bottom. It does happen. But, you've got consumer-facing companies that are doing really well. And, if you look at the price action on a company like SoFi that does a lot of unsecured lending, the big black swan for SoFi would be a mass unemployment event or just lots of defaults because they give out a lot of unsecured credit. So you're looking at credit cards, personal loans, student loans. It's all unsecured. There's no collateral there. If the consumer was falling apart rapidly, SoFi would be getting crushed right now. That's not the case. They're holding that 27 level pretty strongly, even after a dilution event and not getting into the S&P 500. So if you believe in consumer strength, Shopify, SoFi, AppLovin. If you don't, that's fine. You can believe that the consumer is weak. But in the event that we have a melt up for the next several years and that unemployment doesn't come to fruition, I like where I'm at with these three companies. I'm at about 7 or 8% for all three of them.
Oh, wow. Nice. That's pretty heavy for you, especially.
Yeah, I mean, it's like 8% AppLovin, 8% SoFi, and then 6.6% Shopify. So that's part of the reason that I wanted to add Netflix to my portfolio is because I have companies that are really consumer-facing, consumer-heavy. So think about Google. Google makes more money when people are spending. Same thing with Amazon, obviously. Mm-hmm. And same thing is true with AppLovin and Shopify. Those are all essentially consumer technology companies. Netflix, having the subscription model and being counter-cyclical, can balance that out. Because as we talked about, if you have a giant recession, a $10 a month subscription for cheaper entertainment isn't going to be what makes the difference between you paying your mortgage or not. It just isn't. Right. Yeah, you'll have some churn there, but not it won't nearly impact Netflix the same way that it would SoFi if you have mass unemployment.
Right.
So that was just a little update on how I'm looking at some of these consumer.
We both bought SoFi last week then. So
I'm still buying. Buying. The last thing I think we had here was the stock draft. Little stock draft update.
I was very happy to finally displace ChatGPT in our top 6.
We finally got it out of there. All right, so this is the friendly stock draft. For those who don't know,
hey, I passed Benny today. Okay.
We did a fun little stock draft. We didn't do snake order. We just sort of picked 10 companies back in June. And we have Siege currently on top. So we're almost about halfway through here. We all started with a paper $10,000. And then we just sort of took a stab at which companies we thought we were going to do better. Obviously, the strategy of picking high beta companies is going to be a good one. But
it's competition. It's not don't lose money. It's win or go home, right?
Yeah, exactly. Yeah, we're going for 2-point conversions here. We're not
right.
We're not punting the ball. We're going forward on 4th down.
No punts. Going 4th down every time. Yeah.
So here's Dougie's. We've got Hood, HIMS, UNH, Venture Global, LES, SoFi, JPM, NVDA, ASTS, RKLB. Now, these bottom two is exactly why Doug's back in the fight here, because space had a big last week or so with all the data center and space talk.
Yep. And VG is the reason I'm not number one.
Yeah, VG has seen better days, from $1,000 all the way down to $344. Probably couldn't have timed it worse.
Couldn't have. Now let me say this. I'm buying today. I bought today. I bought yesterday. I'm buying.
You're getting a lot better pricing, that's for sure.
Yep, I'm getting a lot better pricing. If you can pull up on your dashboard, pull VG up. I know I sent like a brief overview today in our WhatsApp.
You just want the chart?
No, not the chart. Pull up pull up like revenue and profitability. Yeah, pull up some. So that's what the price is doing. Okay. Cool story, bro. Now show EBITDA.
I feel like Steve Harvey. Show me EBITDA. Here we have EBITDA. This is trailing 12 months here.
Yeah, that is going in the opposite direction of the stock price.
It is.
I'll buy that chart.
Well, let's look at it quarterly here. Yeah, it's going the right way here. So,
yeah,
and I think the idea here is that they're putting in lots of money to build this out. They're taking out lots of debt that doesn't expire or doesn't mature, I should say, until 2029, 2030, 2033. If you actually look at their debt schedule, you can just ask an LLM to do it for you. Just ask what the debt schedule is. It'll pull it up. Should be accurate. And then you're going to get paid on this over a long period of time. Was this the best choice for the stock draft? Maybe.
I did go up to 25 before it turned around.
Well, there you go. I mean, there were some other names that have done really well in that similar gas space. So if you look at, your favorite Caterpillar or GE Veranova, that had a rip-roaring 14%, 15% day today. So the demand for natural gas is not going away. And I think Matt even posted something about Europe locking up an agreement that they're going to be getting off of Russian oil and gas, and we're going to be exporting to Europe for the foreseeable future.
And we're about to start full-on winter.
Mm-hmm.
What do you think is going to happen to the spot price? Because that's what VG does. They take advantage of the spread in the spot prices between the U.S. and Europe.
Now, I'm not an expert here on this name. I don't own any. Do you want to talk about the legal proceedings that are going on right here?
So
that's the main reason for the decline in the price action, right?
Yeah, super short term, people not understanding what they own and what the lawsuits mean. And I'm going to make this very, very simplistic. And I'm not a lawyer, so I could be seeing this incorrectly. But VG was completing construction and they hadn't received the full authorization to turn their plants on, but they were kind of, if you think, they were running like a soft opening on them, so they were operating, but they weren't like grand opening yet. And they did have contracts with other companies to provide natural gas. But because they weren't officially open yet, they were taking the spot price, which was higher than their contracts were for, and they were selling at the spot price. Well, the companies that they had contracts with at lower prices were like, but that's our natural gas you're selling. And VG said, no, we're not actually open for business yet. This is kind of a soft opening. Like we're gonna take our money there. So
how does this all of this unfold? I guess.
So eventually those are all going to get resolved. or settled, and I mean, and they're just going to ship natural gas across the Atlantic, and
then the overhang on the stock goes away.
Yeah, I mean, how long can the overhang on this? Because that EBITDA is after. That's after everything. That's retention. So if they're losing money on lawsuits, if I'm correct in my knowledge, that would be deducted before we're left with the final EBITDA numbers. I don't
an opportunity.
Yeah. Yeah. So like it's hitting all-time lows right now. Like what's the I sent this to you in our chat earlier. Let me just pull it up.
While you're looking for that, here is the stock draft that I went for. You can see that Hood, AMD, Google, SoFi. Those are the four big winners for me, all hovering, in that 80 to 90%. HIMS is the loser. HIMS and Fannie, FNMA, those are the two wild cards that I've got in there. And then Rocket companies and Home Depot, those are rate cut housing plays. So I've got three in the rate cut housing area. And obviously Hood and SoFi are going to benefit from rate cuts as well. Then I've got, my two hyperscalers. I've got HIMS, and then I've got my Shopify and my AMD. So who knows if AMD is going to hold up? That might hurt me before this thing's all said and done. I might give back some of that. But, maybe Home Depot or SoFi or Google keeps doing its thing, or maybe Amazon gets in the mix here because Amazon hasn't really done much. But that's where I'm at in terms of my portfolio. Let's have a look at the winner. So far, this is the winner. And if you're like me, you might only recognize like three of these names. But Siege really has an eye for picking these things out. Big winner with VSAT.
Oh, yeah. He's been fantastic.
Did you find the message?
I did not, but it was like I had kind of the central, like just the price to earnings and the PEG ratio. I mean, I think it was like 5. There's either price to earnings or price to EV that was 5, and I'm like, these numbers are getting stupid low. Like, I don't see how people can keep selling this.
Forward PE of 5.
Okay, yeah. Did you find it?
Well, I didn't find it on the message. I just found it on a different site here.
Okay.
Price to sales of 1.34.
Yeah, like
it's a $14.8 billion company. That's the market cap right now.
Yeah.
It's 14.8.
Right, yeah, kind of like if you applied like an average multiple to it, like the price target would be 13, which is a double from here. So like, if they can just get back, they should be able to get back to that when they just start shipping natural gas, and then they show it on earnings.
Now, if you guys are interested in learning more about natural gas, I'm going to plug Cash Flow Chronicles, Chris and Matt. Great resources.
Their X today, actually, great content on VG and NEXT.
Ooh, you said Matt's? We can pull it up right now. Is that who you said posted it? Was Matt?
I see one on Chris. I know Matt had a really good post today too. It might have been in his private chat, and I don't want to give that
sure
if it's if that was the case.
Yeah, just if one of them had posted something good here, I'm just gonna share it. Oh yeah, here is the post from Matt. I've got it here.
Okay. Yeah, so he prefaced this with saying you're not all on X, so he put it in there as well. So it's probably on X somewhere.
There you go. So on December 3rd, the EU solidified the need for U.S. natural gas. Mid-2026, short-term LNG contracts from Russia to Europe will cease by 27. all LNG from Russia to Europe ceases. So Matt making a really simple yet strong case for, the demand side that both VG and next decade are going to be seen. I'll see if I can dig up Chris's tweet as well.
I mean, you can call those cope if you want, but I mean, something is going to happen, and someone has to supply those. These facilities don't build themselves.
They do not. And there's only so many of them, right? Like, it's a pretty high barrier to entry. You need a lot of capital to make something like that happen.
Yep.
I don't see anything from Chris, so I might be missing it here. Do you want to summarize like what it was that you saw from Chris?
Well, how about I just?
Oh, here it is. I did find it. Just kidding.
It's a long post. Okay.
All right. Falling prices in Europe and Asia are a hurting spot. Exposed names like Venture Global immediately. Meanwhile, a wave of new supply combined with rising U.S. data center demand is crushing the arbitrage spread. Venture Global is also suffering from a headline risk with litigation overhang, what we just talked about. Eventually, those issues will be settled. Even tolling-based companies like LNG and Next are seeing multiples compress as the market questions future growth. We've hit a supply-demand air pocket, is what he's calling it. Investors are fearful regarding the profitability of the entire U.S. LNG trade, which is a bit nuts to me. I and others like Real My Money believe this flip will be short-lived. Venture Global has some of the lowest liquefaction cost in the game. They will capture the market share while others struggle to get FID, thus lowering future supply. Margins are low now, but the payoff comes when demand catches up. But supply stays somewhat flat for years of underinvestment during periods like the one we're in now. So what he's saying here is if you have underinvestment in a space and then demand eventually catches up, you're going to have the spot price go up faster than you actually have the ability to get supply online. That's where NVIDIA has been at for the last 3-4 years, where the demand for compute went through the roof and you only had one game in town, which is why everyone's scrambling to build data centers right now.
Yep. Current cash flow is funding growth. So, once they're done building out their facilities in Plaquemine Parish, et cetera, they're going to start paying down debt and improving their credit rating, and everything they're not paying in debt starts going towards their bottom line, starts going back into share buybacks and dividends. VG already pays a dividend.
It's interesting. I need to do more homework on the LNG space myself. But from everything that I've heard, it certainly seems compelling, and I've looked at it a little bit. As a growth investor, it's not my forte, but I definitely think it's an interesting opportunity. Did we have anything else that we wanted to hit on, Doug?
No, I think that was our okay. Well, I did have one other possible tinfoil hat theory for the reason in the Oracle sell-off this afternoon.
I love it. Conspiracy corner, hit me.
So I don't know if you saw this. This is breaking news this afternoon. Shamar Moore, the Michigan head coach, fired and arrested for some kind of improper something or other. So now that means Michigan has to hire a new head coach. So Larry Ellison's selling off shares, raise capital to hire a new football head coach for University of Michigan. Hey.
That would be a really crazy truth, but I've also heard crazier.
Yeah.
We have heard crazier. Bengals are dead.
Yep. Bengals are dead. Self-inflicted wounds. Back-to-back passes of interceptions. Joey B, what are you doing?
Did you he complete a college football bracket at all?
I don't care about that.
No.
College football bracket. Well, I mean, Michigan is supposed to play Texas this week, and they just lost their coach. But I find it curious that Ole Miss and Tulane, the other two teams that just launched their coaches, are playing each other. John Javari, no, Ed Orgeron did not do anything like that. He's actually being considered for being rehired at LSU as the defensive line coach. I actually, my wife's a big Joe Burrow fan, and she said he posted something today saying, like, I don't know if this is fun anymore. If it's not fun, I don't know why I'm going to keep doing it.
Yeah, I saw the quotes of him saying that. I didn't actually see the clip yet, but I mean, it's pretty clear that I think any human being would be frustrated if they're in the situation that he's in, because, you just got kind of poor coaching. You've got a terrible defense year after year. Any of the good players on the defense, they decided to either trade or not pay. You've got poor play calling. They got rid of, Lou Anarumo, which was the defense. It obviously was not his fault that the defense didn't work last year. That's really clear and obvious now.
Yeah. But he had to, Zach had to fire somebody. Keep from getting fired himself. But I don't see him surviving this year.
I hope not. But, they kept Marvin Lewis around for well past his welcome. So we'll see.
Yeah, but they weren't paying Carson Palmer $250 million.
No, they were not. We'll see. I'm not holding my breath.
Now, you know what? Joe could have a defense. He could have taken 150 million inside and not 250 million. Just saying.
Yeah.
But I mean, Odell Beckham told us last week $100 million just not that much money anymore. Can't be expected to live off $100 million.
Here I am just trying to get to my first 7 figures, and he's talking about how 9's not enough.
Right. Yep. Anyway, brother.
I think that does it, because it's getting kind of late for you, 11 o'clock work night. So check out in the description down below, Doug's X, my X, again, the Street Exchange. If you guys are looking for 24/7 chat after all the streams are done, that's where you'll find it. There's also a schedule in there of whose shows are when, and some pretty fire tunes. I checked it out the other day. I had my headphones in. I was jamming out.
It's great. Like just have it on in the background while you're working. Concentrate music, and then you're also in the chat if you have to. You're there and ready to go. But yeah, proud of the work that our boy is doing on that particular project as well. That's just kind of, we're just kind of seeing a tech demo on that right now. I think he's going to get that to scale, and it's going to be really cool.
Ooh, all right. Ooh, I'm excited to see what's going to happen there. All right. Bye, everybody.
Bye, everybody.